Hello and welcome. You're watching I'll Speak You on Bloomberg Quint Live. I am Agarwala. If you've got questions on equity, this show is perfect for you. Send your questions to us on Twitter, Facebook, YouTube or WhatsApp. You can also call us on 022-4540-4141 or mail us on askspeakyou@bloombergquint.com. However, make sure you do add the AskSpeakYou hashtag. Before I move into individual queries, let me take a quick look at the Indian markets. And well, they're trending higher after 7 straight days of losses. Nifty is trending higher by around a little over quarter percent, and Sensex also up by as much as 0.3%. In terms of the banking Nifty index, again, that's showing a little more strength coming through, up nearly 0.8% there, and once again making, and in fact trying to make that dash back to 27,000. Let's take a look at the broader markets. Are they moving in tandem with the benchmarks? Well, yes, more or less actually. The mid-cap index is outperforming and the small-cap index is also up as much as 0.5% at this point in time. And on that note, let's move on and take a look at some of your key gainers and losers on the index as well. So if we consider the Nifty gainers in what is actually driving the index higher is BPCL, up 2.9%, followed by ICICI Bank, which is also up 2.5%, Vedanta up 2.5% as well. Among other gainers too, in today's day of trade, again, plenty of traction in Bharti Airtel, Z Entertainment and Indian Oil Corp, all of them advancing by 2%. A special mention for Indian Oil Corp, even as it signs a new deal worth, well, for about 3 million tons, worth 1.5 billion for import of the US crude. In terms of losers for the Nifty and on the Nifty, we have some weakness in NTPC, which is down 2.8%. Infosys as well as TCS. In fact, a lot of these companies from the IT sector are under pressure in today's day of trade. And perhaps if we can pull up the next set, yes, there you have it. Dr. Reddy's, Tech Mahindra and Indiabulls Housing Finance. So 3 of those 6 losers are from the IT space. So, well, moving on, I'm going to get in our experts of the day. We have Aditya Agarwala of Yes Securities and Kalra of Target Investing, who are joining us live in the studios. Thank you guys for joining us. Well, I'm going to start off with the first query. It comes from Naresh. He writes to us, he has shares of Varroc Engineering bought at 961, and he also has shares of Hikal at 194. He wants to know what he should do. Should he buy or hold? Okay, so he hasn't mentioned if he wants to take a fundamental or a technical view. Samir, why don't I come to you on both these? How you placed on one or either or both of these?
So I think Varroc is a high debt company and it has a lot of receivables on its book, as I can see. So I think it's better to stay away from high debt, high receivables company and look for a better management and high corporate governance companies.
So by receivables, you say that it's
the work is getting done. The more execution you do, the more receivables stand on you.
Correct.
And the payments might be on the 60-day only. But the only point is the conversion is not taking place that quickly.
Okay. All right. Fair enough. Any word on technicals here? Aditya, any guess?
So the stock has been continuously making lower lows, lower highs. So the view will be the same for even for Hikal. Stock has been continuously sliding downwards. There doesn't seem to be any respite whatsoever in the stock. So for both the stocks, I would suggest stay away from the stock. If he's already bought into it, my recommendation will be best to exit. I know we'll be booking out losses, but the best way out is to exit from these stocks and put money in some good names.
All right. Okay, well, let's move on and talk about some others. Then we have a question from Mayank Saraf. He wants a view on Stel Holdings and Spencer Retail, STEL Holdings, and of course the other one is Spencer Retails from a 5-year perspective. All right, Samir, I'm not sure if STEL Holdings is something I have
There's nothing on the numbers as well.
All right.
There's nothing I can tell you.
All right. And what about Spencer Retail? Have you studied that?
Spencer Retail, I think it's better to exit while you can. Because if you see post the split, all the CSE stocks have taken a battering. And I think the debt is too high, and for a retail business to pay off that kind of a debt and not expect a future debt on its books is a very rare situation. And Spencer will not be on that. So I think they'll increase their debt on the working capital side, and the margins will get a squeeze.
Okay. Well, there you have it. Moving on to a question from Akshay Mittal, who actually wants to know about Godrej Agrovet, which he's bought at 640. And he also has a question on graphite, but we'll take graphite a little later on. Godrej Agrovet at the entry price is 640. He's clearly making a substantial loss. Aditya, what would your advice be?
So still, the stock is still in a downtrend, no doubt about that. But having said that, the downtrend seems to be losing its momentum and steam. So my recommendation will be to stay invested in the stock. Probably look at trade above 510. Right now it's closing around 480, 478. So the moment it crosses 505, 510, there could be a reversal in the downtrend that the stock is witnessing right now. On that point of time, probably I would recommend him to average above 505, 510. Don't look to buy at current levels. Don't average down at current levels, because the downtrend is still on. I'm not sure whether the downtrend has ended or not. But having said that, because RSI is suggesting that the downtrend is losing steam, he might see a short covering rally or a pullback rally in the stock. So above 510, he can look to buy some more shares. And in that case, I expect the stock to bounce back to levels of 580, 590, but he'll have to hold on to it for some time.
Absolutely. And of course, the other question is on Graphite India. So let's pull up that one as well and see where it's trading at. His entry price has been at 940. Again, the stock is halved, and of course, bulk of these losses came in 2019. And well, there's no relent here. There's no respite here for investors here. At 402, what's your advice here?
So 400 is like the last support zone for the stock. If it breaks that, chances are it will slide all the way down to 340, 330 as well. So there is sizable downside still left in the stock. It's not halting at any of the support levels that previously the stock took and bounced back from those levels. So at current levels, even at current levels, I doubt whether it will hold on to 400 odd levels because of the massive selling pressure that the stock is seeing. So my clear recommendation will be to stay away from the stock. Don't look to average down. Probably if he can hold on to it and see for some more for a few months whether the stock settles down and then starts to go up. But at the moment, there doesn't seem to be any respite.
And if he is already in it, to book profit, book losses.
I would recommend below 400. You should look to exit from the stock.
Okay, all right. Well, of course, as we all been talking about graphite and HEG for quite some time now, for a few weeks now, and the problem that the companies face. But moving on to, we again, two companies here. Ayush Gupta wants a fundamental view on one JK paper, and the second one is Phillips Carbon Black, keeping in mind 3 to 5 years. Can we buy at present levels? Samir, can we?
So JK paper is in an upcycle. The paper industry itself is in an upcycle. So you can buy a nibble in it because the quarterly profits still next 2 quarters will be good enough, quarter on quarter and YOY. But after those 2 quarters, then you see the situation because the capacities are not there. And when the new capacities don't come up, same thing happened to graphite, same thing will happen to paper industry. The numbers come on the base. And then improvement on the YOY basis on those kind of results becomes next to impossible because your capacity is extinguished. So be careful. You have a 6 to 9 months of good time in that until and unless, because there is no capacity announced as of now. On the Phillips Carbon, the crude prices are the most influential part of that business. So I don't think so you should be in that kind of a play until unless you really catch the top of the crude. Because when it starts to come off, Phillips Carbons actually benefits. So I think that's the place where you would like to be, and I think crude is on the upside as of now.
Okay, well there you have it. I hope that helps. But moving on to a question on Grasim, Manikant wants a view keeping in mind the February series. So it's clearly a short-term view here at 713. That's where it's trading. Aditya, how would you trade Grasim, long or short?
So I would look to take a long trade in Grasim. Most of the cement stocks are buzzing in trade today. So is Grasim. It's almost up 2% in trade today. It's almost formed a good base around 690 to about 680 odd zone. Just a minor hiccup at around 720. So if he looks to buy at current levels, he can look to book partial profits around 720. And if it crosses 720, upside targets will extend to 750, 760 as well. can put a stop around 695 for getting into a long at current levels.
All right.
But yes, a long trade is advised.
Fair enough. A long trade is advised on Grasim. And we actually have one more technical question on Britannia. We have Janali there, Durga Devi. Well, actually, the question is really simple and straightforward. Levels to watch out on Britannia. So I'm not sure what the viewer wants to do, buy or sell, but interested in perhaps supports and resistances.
Sure. So this week's low is very crucial, which stands at 2760. So 2760 should act as a good support. Yesterday in trade, we saw a good pullback from the lows of 2760, and right now it's trading around 2930. My sense is a temporary correction that the stock had witnessed is looks to be over for the time being. There can be a short covering rally towards level of 3100, but beyond that, honestly, I don't see too much of an upside in the stock. From current levels, an upside to 3100, 3150 is possible. Yeah. On the downside, 2760 should be watched out very closely. If that is broken, stock can slide all the way down to 2600.
All right. Okay, well, on that note, we move on to the metal sector in general. We have Perumal, who wants a fundamental view on a MOIL holding at 209. It's down 30%. Please suggest hold or exit. Okay, well, okay, it's clearly looking at a significant loss out there, around 55 odd rupees gone. Samir, can you comment on this?
So I think it's better to exit, because fundamentally I don't see anything in the company which reverses the trend which he's seeing right now. It might inflate the trend which is going on the downside. Yeah. So I think it's better to exit. You'll take a hit, switch it to something like a Vedanta or a Hindustan Zinc, because he's getting exposure to the commodities and the upside can be still more sustainable. Yeah. So I think that's
okay. Samir, you know, we also get a question usually on Coal India. Everyone suggests that Coal India doesn't really move, but look at its dividend yield. It's so much more than a lot of these. Where do you stand here?
So I think if you're looking for that kind of a dividend yield, FD is the better. Right. Right. You'll get at least your principal is safe enough. Right. Yeah. And I think if you're looking for the appreciation, I think Hindustan Zinc for me out of the metal space is the best. Yeah. Because the products it gives has no competition in India. Yeah. Second, the utilization of those products are going higher day by day, and the cash flows are still very there on the books. And the only risk is Vedanta buys over the government stake, where I'll sell it off.
Okay, fair enough. Moving on to a technical view on Kaveri Seed Company. We have a question from Karan Singh. He wants to know what can be done with this one. Aditya.
So it's in a complete downward trajectory right now. It's down almost 29% this month so far. So and today also stock is down about 8% on very good volumes. My clear recommendation will be to stay away from the stock. Can slide all the way down to 400 odd levels. Right now it's at 430. Don't look to enter into a long trade. Probably if one wants to look a short trade, look a pullback rally towards 440 to about 450 zone. That is the zone to go short on the stock. Stock can slide all the way down to 400.
All right. So well, there's some weakness certainly on the cards, especially today as well. You're seeing a lot of selling on heavy volumes coming through. Well, we'll move on and talk about Bharat Electronics. We have a question from Shubham Garg. He says he holds Bharat Electronics at 180. And he says, of course, that he's lost 60% of his capital. What should I do now? Samir, what should he do?
I think fundamentally I don't see any reversal. Okay. These are more of late rallies on defense stock and others. You can wait for another 1 year, see the new government, there'll be another talks. It can come back, it can even surpass what levels you have. So that's the only risk. If you have that holding risk with you, I think that's a place where you can buy it or average on the lower ground. That's where I see it.
All right. Technically, do you think there is a spot anytime in the
There can be a short covering rally, but honestly not to the levels that he's bought into. My short covering rally targets could be as high as 81, 82. From current levels of 76, it will be nowhere near to what he's bought into. So for that matter, I don't think so it makes any sense for me to tell him anything. But yeah, he can look for a long trade for a very short-term rally of 81, 84 levels.
All right. Well, okay, that's certainly a tough deal at this point in time. But moving on to a question that we have from Vinayak, and he actually wants to know if it is a good idea to do SIP in 3 stocks: ITC, MCX, and HDFC AMC, keeping in mind a 3 to 5 year. If not, what are the good options? Okay, Samir, a fair enough question. Do you like these 3 stocks? How you stand?
So I think he can replace ITC. He can go with HDFC AMC, HDFC Life.
Okay.
And the third one was
MCX.
MCX, right?
Yes.
Because they're all 3 future targets. The risk in MCX is about competition as of now. NSE is coming into commodities. So if he sees that kind of risk, there might be a certain downside, which I think that SIP will handle off.
Right.
So I think MCX can be the lowest weight in the whole thing, and HDFC Life can be the highest weight in the SIP mode, and then HDFC AMC.
Samir, ITC is one of the few FMCG companies which actually trades below its 5-year average. Why do you not like it?
See, it's not that I don't like it. It's not a space where you want to do a SIP, because if you see that trend, last 3 years or 5 years, you've not got much of return on that SIP.
Yeah.
It's more like you do a lump sum before the budget, where the fears are there, you sell it post the budget.
Sure.
I think he'll earn more than what he does on a SIP mode.
Yeah.
So that's a very basic fundamental of it.
All right.
And even the business is not liked by a lot of institutions, which is the major secret business.
Right.
Even if you're showing a volume growth, the prices of the stocks are not going up. So I think it's better to stay away from these, because the quality institutions still are away from this stock. So that's
okay. Well, there you have it, Vinayak. I hope that helps you with your decisions in the SIP. But moving on to the next one, it's a technical view on VA Tech Wabag. Maheshwari Ramakrishnan wants to know what can be done with this. Now, he hasn't mentioned long or short, but your view here, Aditya.
I would not look to take a long trade in the stock. It did manage to show some strength in the previous month, but again this month it's again down 9%. It's given up all its gains. I'm not too bullish out here. I would recommend him not to look at VA Tech Wabag to take a long trade if he's looking to look for a long trade. If already he has taken a long trade, then probably keep a stop at 240 and exit below that. Okay.
All right. Well, okay, so we have another question on JK paper. We have Chiranjeep Sarkar on Facebook. Chiranjeep, because it's a fundamental view, Samir has already suggested that for now, at least from a 6 to a 9 month point of view, it may not be a bad bet, but you have to keep in mind that after 1 year, it is going to be very challenging for the company to show up those earnings because of the base effect also coming in across various capacities. But there is also a question on HDFC Life from Harshavardhan. Again, Samir is fairly constructive, as he's already mentioned just in the previous answer. But on that note, I move on to a question on Amami. Mohammad Sharfuddin wants to know if it's a good time to enter Amami, keeping a 5 to 8 year horizon. Samir.
So I don't think so. This is a good place to enter, because today's boost is through the promoter stake sale, and that's really not a good place to place your bets,
right?
Because for whatever reason they've sold, they have reduced their interests, right? Their economic interest is out of the system as of now, and even there's pledge. So I would have sold the stake which was unpledged and released the pledge stock,
right?
But they're not doing that. They're paying off the debt. So I think even that 60% which they have right now can go even further down.
Yeah.
So I don't think so. And the business is already facing a lot of competition fundamentally from Dabur, HUL. Now that everyone is going into the Ayurvedic, organic kind of a place, you have a lot of private players also kicking in. So I think Amami future is getting suppressed into that. So it's better to stay away.
Okay, well, on that note, we move on to a technical view on Ashok Leyland. We have a question from Riddhi Shah. Ashok Leyland, of course, as we all know, has been reeling under pressure. However, it's showing some resilience around 78 and 80 rupees per share. Aditya, how's it looking?
So I would look to buy in tranches as far as Ashok Leyland is concerned,
okay.
if it's not a very short-term trade. So look to buy some around 80. So I don't expect the stock to break 73. 73 is a good support zone for the stock. But having said that, it can test those levels of 73. Because the weakness is still there. There can be a short-term pullback towards 90. But again, stock can claw back to levels of 73. So my recommendation would be to look to buy between 73 to 80, stagger your buying between 73 and 80, and then look for targets of 110, 120 over a longer period of time, 6 to 7 months.
Okay, so there you have it. That's your view on 6 to 7 month basis. But on that note, we move on and we've addressed the metals pack, but there is one which stands out. We have Ram Prasad on Facebook who wants a view on Tata Steel. Okay, he hasn't mentioned, so I'm going to take a technical and a fundamental view here. Samir, first to you, Tata Steel on a fundamental basis.
So again, as I emphasize, metals for me is Hindustan Zinc. Nothing more, nothing less.
Okay. All right, fair enough. Aditya, your view here.
I can take a long trade in Tata Steel. Stock seems to have done with its corrective wave. 450 seems a good bottom for the stock. At around 472, good risk to reward ratio. Stock can bounce back to levels of 550 in the coming time. So a long trade can be taken, keeping a stop around 450, 445.
All right. Okay. Actually, we've been seeing some repeat questions here. So I'm gonna. Okay, I'll get on to ICICI Bank then. Gaurav Jaggi wants to know, and again, he hasn't mentioned a fundamental or a technical view. Samir, come in on ICICI Bank.
So I think right now is a good place to get out of it because the overhang of whatever has happened by the previous CEO still hangs on the current management as well, because they were in somewhere connected to the committee.
Okay.
So I think that will be clear on once the investigation is out.
Okay.
Till that time, he can switch to a Axis Bank or a Yes Bank as of now.
All right, there you have it. That's your view coming in on ICICI Bank. Preferences towards Yes Bank and Axis Bank. A 1 year view needed on HUDCO. That's HUDCO. Kaushal Patil wants to know. Let's take a technical view here. At 38.5, it's up 2% today. Aditya, how's trade looking?
I would completely avoid the stock.
All right, completely avoid Kaushal. That's the view coming in. The other question also from Kaushal is NTPC keeping in mind a 3-month point of view. It's again 134, down 2.5%. Aditya?
Again an avoid out here. So both the stocks actually don't move at all. The last time also I mentioned on the downside it is around 110, then the support on the upside is 180. It's on the middle of the band. Avoid NTPC and HUDCO both.
All right. Okay, so it's that time of the show where we get in the rapid fire segment. Again, request our experts to keep their answers as short as possible so as to keep accommodate as many queries as possible. And on that note, I'm going to take a technical view on Tata Elxsi. We have a question from Vishal Yadav. He said he's bought Tata Elxsi at 860. That's pretty much the current market price. Aditya?
Hold on to it, put a stop at 830, stock can bounce back to levels of 940.
All right, and the next question is from Sudhanshu Pandey. His question is CARE or CRISIL? Which one is a better bet with a 3 to 5 year view?
CRISIL.
CRISIL. Why would you want to mention?
Because the cash flow generation is much better at the CRISIL levels.
Okay. All right, so Sudhanshu, there you have it. CRISIL over CARE. We have a question on HDFC Twins actually from Sunan Chakrabarti. Perhaps you could take both the views. HDFC Limited is at 1878. Let's go and see that first, Aditya. Where do you stand on HDFC Limited?
I would bet on both the stocks. Both the stocks have witnessed some correction.
Okay.
So HDFC Limited at current levels give me good to risk to reward ratio. I would put a stop around 1850. A long can be taken for targets of 1950. HDFC Bank on the other hand is like more. It hasn't corrected much as compared to HDFC Limited. So there's more strength as far as HDFC Bank is concerned. Long trade here is also advised. One can put a stop at 2080 and look for a target of 2130 to 2150. 150.
All right. Okay. That's the view on HDFC Twins on a technical basis. Another question, we get this question a lot. Sterlite Technologies, from the long-term view, Ramanuj Jhawar wants to know, what would you do, Samir?
So I would avoid it. The business is good. Again, I'm saying the customers are facing issue. There's an execution visibility issue.
Okay.
So over there, their revenue visibility gets impacted as well.
All right.
So I think it's a hold for me as of now.
Okay. Ranjit has a pretty straightforward question, Aditya. A buy or a sell, keeping in mind 4 to 5 months view. Any idea?
Oh, any idea?
Any idea. It could be anything.
It's open-ended.
Yeah.
Okay. So probably I would look, I would avoid IT at the moment. IT can face some issue. One space to look at could be the cement space. I believe cement is doing good. So Ultratech Cement is one idea which can be looked at buying. Stock at current levels look decent around 34.70. I would look for a target of 3800 and a long trade is advised here.
All right, there you have it, guys. Ranjit, well, the cement sector is for you then. And on that note, we've reached the end of the show, so I'm going to thank both our experts, Samir and Aditya, for joining us and helping our viewers with all their queries. That is all that we have on this edition of Ask PQ. But remember, we're just a tweet, a post, or a call away. So keep your queries coming in. We promise to address as many of them as possible. For more news and updates, stay tuned to Bloomberg Quint. Up next is Power Lunch.